second. Cool. I know there's only a few of us in here, but we're gonna get this call going. Give me just 1 sec to set all this up. I was actually in the middle of cooking. I ended up cooking a lot later than usual today, so but just so you guys know, your boy gets down. I made some bomb ass mole. I don't know if you guys eat Mexican food, but I made some bomb ass mole. But all right, let me set this up real quick. Drop some sevens in the chat if you guys can hear me loud and clear. I know that, like I said, there's only about a few of us in here, but I want to make sure that you guys can hear me loud and clear throughout this markup. You guys can see my screen here in just 1 second. Can you only hear me through left channel? That's kind of weird. Let me know if that's everyone or if it's... Oh yeah, me too. Okay. Huh, that's super weird. Let me check my computer because that's super weird. One second, guys. Yeah, give me 1 sec. I'm just going to... Only left? That's so weird. That's super weird. Well. Okay. Well, maybe you guys can hear me a little better now. That's super weird. I'm gonna have to look into that. Maybe restart my PC. Cause yeah, that's super odd. All right. Well, I guess. Give me 1 second. Let me try one more thing, and then we can go from there. How about now? I think I feel like this setting would have worked, right? You guys should be able to hear me. Yeah. I mean, I did my one-on-one earlier today, and nobody said anything, so I'm pretty sure it's maybe Streamlabs settings. I'm pretty sure I may have fixed it just now, so you guys should be able to hear it on both channels. Either way, so yeah. Okay, cool. Thanks for that, guys. I might have done that for a couple of sessions. You know what I mean? Who knows? So hey, welcome everyone to another Technical Tuesdays. We've had quite an eventful week, so we have quite a lesson today. So let's dive right into it. Okay. In terms of DXY, let's review what our previous monthly objectives were versus now. Okay. So monthly objectives, previously I wanted to see if we could get back up there. My eyes are still drawn to the highs, specifically that previous monthly high. Of course, we don't have to get there anytime soon. I do feel like we need to get... Price action is obviously looking for more downside liquidity before we move to the upside. So given that, being this whole weekly range here, I would like to see us return back to 50%. So really just taking out this low. But one thing I will be noting is the fact that we have this imbalance here still. And so I would really love to see a full body closure below to confirm deeper discount price action. If we don't get that body closure, we could be looking at the low of the week created by CPI. Now, I'm not too much of a fan of what price action left behind in that area, but on the weekly perspective to a monthly perspective, okay, I feel like we're in a liquidity buildup phase. Okay, so I feel like this month may potentially be a liquidity buildup and may slowly, gradually make its way down this range with a lot of back and forth. And so we've seen two consecutive bearish weeks after very impulsive, very strong bullish weeks. Okay, the upside seems to be exploding to the upside, and then the down days seem to be taking a lot longer to move down. Okay, so previous monthly high is still my main objective. That's overall where I see price action going for the time being. I am bearish at the moment and looking at potentially coming back to this insufficiency. Okay, and the daily, of course, is still in this bullish, I guess bullish, how would you call this? I guess bullish higher low. And we've been at this higher low for a while, just kind of gradually coming into it, pulling away, coming into it, pulling away, coming back into it. So it doesn't seem like we're really running away from or pulling down to the downside too much, besides right here. Okay, this big down push. And noticing the up pushes, okay, the up pushes seem to be very aggressive, but they're short. We seem to be having a lot more bearishness coming in on an intraday perspective. But overall, I just want to say, weekly perspective, this low right here. We don't necessarily have to get there, but overall that, if we don't end up respecting this imbalance, that would be it for me. And that would really go well with indices right now, because excuse me, I don't know where I put my water. Okay, that would really correlate well with indices. I would like to see DXY kind of break out of this bullish structure on the daily and continue this bearish counter trend to more deeper into discount, because right now we're really just in premium price action, just shorting off. The only thing that's really bullish is this previous higher low that's just kind of holding that whole bullish structure. But if you guys are looking at this in a more technical standpoint, the counter trend makes this pretty bearish, and I'll show you guys where. So here you guys can see is where we got that last higher high. Okay, then we get this lower low here, lower high, and lower low. The moment that this got crossed, this was a failure to create a higher high. And so this is you can say, your shift in structure. Okay, so really, if we're looking at this in structure standpoint, the shift in structure really took place here once this low was taken out, and we closed clearly. I mentioned this last week. We clearly closed with more intentions to move more bearish. So if Monday creates the high of the week, that would be because of this bearish imbalance here, taking out Friday's area and just, falling more towards this discount. Okay. Now, because it's FOMC tomorrow, there's a couple of things that can take place. Okay. FOMC tomorrow, the last FOMC we had. I want to show this to you guys because I was studying it, back testing it earlier, and I thought it was really good information. to be aware of. Give me one sec. Okay, so right here. We're going to be reviewing this right here. Hold on. We'll go back to the 1 hour. Okay, we're going to be reviewing this right here. Okay. I imagine you guys can see my screen pretty well. Okay, we're going to be reviewing that right there. So that's USD FOMC. Okay. May 3rd was the last time we had this. Okay, so we're going to go back to May 3rd. The last time we had federal rates. Okay. And here on May 3rd, you can kind of see we just pulled up to the upside and just continued dropping. It was more of a bearish move than anything else. And then the following day kind of recovered all of that. Okay. So now on FOMC, we had last time we had federal rates hike. Okay, so we've been hiking rates for a while now, since November and probably before that. Okay, so we've been hiking rates. I believe this time they're forecasted of 5.5, 5.5. Okay, it's projected to go to 5.5. We'll see what ends up happening tomorrow, what the report actually comes. But if it strikes with higher rates, higher percentage rates, then what that means, what this is telling us, is the dollar will more than likely continue pushing lower. Okay, and the Federal Reserve has been pretty clear about the rates being hiked at least. I don't remember how high they were going to go. I don't remember the exact number, but they are going to continue going higher. As much as they'd like to say, oh, we are working on inflation, we're doing this, we're doing that. Give me one sec. Sheesh. You guys are seeing my mess over there, my books. I left that stack right. I took that stack off my desk so it looked more clean. It's so funny. Give me one sec. I guess my iPad's not too bad there. Okay, so basically, the Fed's been saying that they're going to continue hiking prices, hiking rates. Okay, so given that, you can anticipate, and you can even go back and test this yourself. March 22nd. Okay, let's go to March 22nd real quick before we make this. March 22nd. That was a while ago. There it is. March 22nd. March 22nd, we went from 4.75 to 5.0. Okay, and you guys can see the bearishness just continued, and we had a big old dumpage at 2 p.m. Okay, that 2 p.m. ended up falling pretty hard. All right, and if you guys want to go back one more, February 1st. Last one we'll do. February 1st, we went from 4.75, for 4.50 to 4.75. And you guys can see 2 p.m. spiked up. Then we had this massive drop right here, leaving a very big gap. Okay. So FOMC, if the Federal Reserve continues to hike up rates, we will be seeing DXY continuing to drop, respecting this overall range bearish counter trend, and continue dropping. Now, where will it drop to? I'm still looking at that previous weekly low. I know we have previous daily lows, so of course that will be first objective. But these are so relatively close that I believe that they're very achievable. So, looking at about that previous weekly low and ideally 50%. So maybe looking at quite a drop. As you guys noticed, I don't know if you guys did notice, but if not, I suggest going back to the recording. Notice that all the FOMCs we had the following day was a big spike to the opposing side. very strong retracement the very following day. So given that, I want you guys to be aware that tomorrow is probably not the best day to hold all the way through, but as soon as your targets get hit, collect your profits and move on to the next day. Okay. I have like these senses, this sense that FOMC is most of the times very speculative and is like dances a lot of before the prices just takes any decision. Yeah, there tends to be a lot of liquidity buildup beforehand, and so let me ask you guys this: if the DXY goes down, what would happen to the indices? Drop it in the chat. If the DXY were to get dropped by the Federal Reserve hiking rates one more time from 5.25 to 5.0, we come as forecasted. If the Federal Reserve were to drop, hike up rates, drop DXY with the report tomorrow, excuse me, and then we see what should we be seeing on indices? Drop it in the chat, please. What should we be seeing on the indices? Let me know in the chat. Okay, cool. Longs. Yep. So you should be tomorrow, if the report comes out higher, we will be seeing DXY drop, and essentially we should be looking for long setups. You guys need to do that due diligence yourself. I'm not a financial advisor. This is just what I've personally studied. I don't know what the Federal Reserve, the rates are going to be tomorrow. I don't have that report, nor do I have like intel on that shit. So all I know is what I've been studying, what I've seen in the past, and what the charts are showing me. And so for the most part, you guys have seen indices just popping off, right? Like popping off. And so let's go to the perpetual futures for the continuous futures for indices. Give me one sec. For Dow Jones. Okay, so on Dow Jones, wow, we already took that. Okay, wait me a second. Okay, so we already took that high, but on here we haven't. So I'm gonna follow this one. Oh shit, I'm gonna follow this one. Okay, and say that there's still remaining liquidity up there. Now, of course, this is super bullish, and if you're looking at it on a bigger perspective, we have that high left right there, still within this entire little range here before we move or decide to move any lower. Okay, so given that, still looking for some more longs. Okay, this is a very impulsive candle, just kind of blowing through all my areas. Yeah, I'm still looking at some more longs. We could keep getting that rejection given that we took out some major liquidity. Okay, we did take out some major liquidity, but personally, across the board on indices, let's go to NASDAQ. Across the board on indices, I am looking for more longs. This one got hit today, earlier today. Okay, so still looking at that triple top on NAS. Okay, still looking at that triple top on NASDAQ. I think we're gonna hit that very nicely. Yeah, not much of a wick to the downside on NAS. Right, we were just very bullish right from the start of the week, so still looking for some more longs, and that kind of is complemented by the FOMC. I kind of went ass backwards and started with like what I want to see for the rest of the week and not what has happened already throughout the week. So I apologize about that. Definitely going to focus on a better order next time. But let's review what's happened, okay? So Monday, when we were here, when we did our first live stream on Monday, we were looking at this whole range, and we were mentioning that this bearish range, despite it being bearish, it had taken out the previous weekly low and then pushed to the upside. Now, we didn't see any liquidity here, so we anticipated some bullishness to back to that insufficiency there, or yeah, back to that daily insufficiency. Now, once we took out that high, we did fall pretty aggressively the following day. But overall, just understanding that the only reason that, even though this was bearish, the only reason that it got taken out is because when you're bearish, okay, every previous high, say you're bearish here, and then, okay, when you're bearish, every previous high, okay, every previous high is internal liquidity. Vice versa, or vice versa for bullishness. When you're bullish, every previous low is internal liquidity. So what does this mean? That because this range failed to provide any liquidity for this sweep right here, okay, because we have failed to provide any liquidity for that major liquidity sweep right there, we failed to provide any internal liquidity within this range. So therefore, because we are bearish, every previous high is in the internal liquidity. Internal liquidity. But essentially, even the previous high in a bearish trend, that high can become the internal liquidity for us to continue moving to the downside. Okay? Just because you've identified internal liquidity does not mean internal liquidity can get taken out deeper. Okay? Please do not consider these type of areas right here the absolute internal liquidity, because internal liquidity will sometimes require a little bit more structure than that. Okay? A little bit more structure than that. So if you're looking at it in the 4 hour, yeah, we have this little high right there, but honestly, look at that fat ass candle just drop, take liquidity, and reject. It just made a lot of sense to come back for internal liquidity here, fill up some of this insufficiency left behind, and then continue moving to the downside for more lows. As we mentioned, we want to see price action continue moving to the downside. Given that even when we took out internal liquidity, there wasn't much of a reaction, and we have failed to continue pushing price action any higher. Okay. So what does this mean for indices? We line ourselves for the longs, correct? So that's something that we've been looking at, is these longs. They've been, the longs have been longing pretty hard. Okay. Nate said pump. Adrian said most likely they'll go up. Yeah. Pretty interesting stuff. Pretty interesting information. Harold said, I don't feel like Dow's going to go to the high as we are over previous monthly highs. Yeah, I mean, potentially. It just depends. For me, I'm not over the previous monthly high. So that's why I'm going to continue to look for the upside. Because in my feed, we have not taken out that high. So for me, the long still makes sense, right? So that's why I'm pretty bullish on this week. Last week, we came into this insufficiency here beautifully, okay? You guys can see it a lot better here on the 4 hour, okay? Here, we came into this insufficiency. We sweep those lows. We continue and have continued creating all of this. What have we done throughout this whole scale higher? What do you guys see? Okay, so to me, we still need to go a little bit higher. The way that we left things off this bullish, to me, I want to see a little bit higher, okay? Because we have previous daily low. Oh shit, hold on 1 second, wrong tool. We have previous daily low. We have equal lows. We have this previous area of accumulation, more equal lows, this beautiful ass, sexy ass trend line. Like, we just have a lot of liquidity down there, okay? Now, just because you identify the liquidity doesn't mean price is just automatically drawn to it, Okay, there has to be enough liquidity to the upside for us to start returning to the downside. Okay, because obviously this go over here. Okay, this objective here, this area here, like we keep piercing into it, keep taking out highs, keep taking out liquidity, and here we are still pumping to the upside, right? Still seeing a lot of bullishness, not much of a rejection once we took out that high, correct? So the 1 hour has been breaking all week, so that to me, we did get a 1 hour distribution. We could move lower. That is very much a possibility. You know, I would not mind at all if we came below previous daily low and continue moving to the upside. But just kind of look how price action's been respecting, building up all this liquidity. Okay, check this out. Monday's divergence with Nasdaq. Okay, you guys can see here on Dow a lot better than on Nas. So going back to like Nasdaq around the open, check this out. So by the time we showed up, it's about 9. Okay, it's about 9 right there. And here on Dow, you can clearly see that this high and that high are moving to the upside. Not just that, but upside liquidity has been taken and previous daily high has been achieved. Okay. Nasdaq, on the other hand, has created this previous high, and if we move to that same high on Nasdaq, you guys can see that we have failed to move any higher, and this is attached. This is to the highs, anchored to the highs. So we're looking at the highs on Nasdaq as well as we are measuring the highs on Dow. Okay. A lot of people identify divergence, but it's really easy to identify it. Now, what do you do with it? Okay, so what this is saying is Dow has now taken upside liquidity. And because now we have taken an upside liquidity and moved higher on Dow, we will with more ease, because why would we need to move higher? You got to ask yourself, why does price need to move higher? Okay, usually because we need to get a little bit deeper into discount. Okay, if we moved higher, it's for liquidity. Okay, so now we took previous daily high and took that liquidity. Previous daily high and London high, took that liquidity. Okay, Nasdaq, because it's so bullish, doesn't need more downside liquidity. So because Nasdaq does not need the lows anymore, it therefore does not need to take the highs prematurely. Dow, being that it's bullish, needed more downside liquidity before we could run. And to get to lower liquidity, what needed to happen? If price action needed to move lower, we needed more upside liquidity to take this lower. We needed more sellers to move, right? We need more buyers as well. So what do? We take out the upside liquidity, turn this thing around. As soon as we take the upside liquidity, we slam down, take the downside liquidity, and now we can move up. Nasdaq is the stronger asset. Why? Even though Nasdaq was moving lower, Nasdaq maintained the upside liquidity, unlike Dow. So therefore, Nasdaq, we won't be looking for Nasdaq to take out the lows, but only Dow to take out the lows. Because Nasdaq, even though it has failed to create higher price action, it was successful in creating more upside liquidity. And why did it not take up more the upside liquidity like Dow did? Because it did not require any more downside liquidity. We did not need any more lows to get taken out for this puppy to move higher from where it was at. Therefore, Nasdaq and Dow, now let's go to Nasdaq here, anchor it to the lows. Okay. Therefore, on Nasdaq, Nasdaq failed to come to the Asian low. But unlike Dow, okay, Dow did come to the low. Drop some sevens in the chat if that makes sense. I know that's a little bit more advanced smart money, but drop some sevens in the chat if that makes sense. I want to make sure you guys are understanding this. Divergence is important. It helps a lot. It's not just important. Everything's important, but everything has its value and significance, right? So what I want you guys to realize, I'd love if you explain it a lot. Yeah, I definitely will show you guys more and more examples of divergence. I know it will eventually probably need its own video, so that way I can go deeper into divergence. But divergence helps a lot, okay? It helps a lot to determine bullishness and bearishness, okay? So again, explaining liquidity, okay? The market is liquidity engineered, okay? The market is liquidity engineered. Because the market is liquidity engineered, sorry, it's just a lot of sunlight in here. Okay. Because the market is liquidity engineered, it is drawn to sweep liquidity to seek out more liquidity. Okay. So Dow is super bullish, but it needs to get to that previous monthly high that we've noted at 3463. Okay, 3463. But before to get to that 4463 or 3463, shit, I already forgot it. 34363. To get to 34363, to get there, we're going to need more downside liquidity because we're not bullish enough to go higher yet. Okay, so what do we need to move price higher is more buyers. And so they're going to come down here, create more buyers, take them out, right? And they're going to use that liquidity to run to the upside. Nasdaq, on the other hand, is easily going to hit that objective and does not need any more lows before doing so. Unlike Dow. Dow needs more liquidity so they can continue hitting these highs. At this current state, that's what this divergence is telling us. Okay? So, thanks to that divergence, I was looking below Asian lows on Dow and on Nasdaq. And let's go over Dow since we're already on it. So, below Asian lows on Dow after 10 a.m., of course, guys, as always, 10 a.m. Wait for your 10 a.m. candle to develop. 10 a.m. will usually, not always, but more often than not, come back for 9 a.m. and take it out. Okay, so 9 a.m.'s highs right there. And let's go look at 9 a.m. overall. You got 9 a.m.'s low right here and 9 a.m.'s high. The range of 9 a.m. is right there to about right there. Okay, that's 9 a.m.'s range right there. Okay, and you guys can see, and I would mark this out. Go back like for a whole month and just back test how many times 9 a.m. gets taken out of the week, out of the month, out of the year. Like, just back test how many times 9 a.m., that hourly candle from 9 a.m. to 10 a.m., that price action tends to get taken out. I've back tested it quite a lot, but don't take it from me. Back test it. Challenge everything that you guys hear on here. It's not to be just taken and believed. It's to be taken and challenged every time. Okay? Challenge everything that you guys see here. So here you guys can see after we swept that Asian low, we started accumulating to the upside. Personally, I would not have seen a shift in structure till this right here, till we started creating these highs. This was my shift in structure. Failure to create a low right here. This whole thing was kind of like a failure to create a low. Okay, a lower low. And then this was the shift in structure. Once we closed above that, the imbalances, right? The imbalances just made sense. So I would have been looking myself anywhere along this failure to create a new high. This candle right here. Okay, that failure. But since there was no imbalance there, personally would not have been participating on Dow. There was clean plays. I'm sure someone somewhere found a really clean entry on Dow and took it, and it was beautiful and spectacular and smack take profit. You're probably still in it. Okay, I wouldn't doubt it. There's probably people still holding Dow. Okay. The reason I went with the Nasdaq is because it's the more bullish asset. Remember, we determined by that divergence that Nasdaq was the more bullish asset. Why? Because Nasdaq had failed. Where are you, Nasdaq? Okay, because Nasdaq on Monday had failed to take out that previous daily high. By the time 10 a.m. hit, it's right there. By the time 10 a.m. hit, we were still looking at all of this upside liquidity. We still had it all, right? So we come into previous weekly opening gap. We have an insufficiency here as well. You guys can kind of see we barely, if we even did. No, yeah, we definitely came into that. Okay, so we identify the overlap, okay, which is clearly that sliver right there. A lot of accuracy, along with this very unmitigated candle. Okay, now I'm against Asian lows. Okay, I'm against trading Asian price action unless I have divergence on my side. Okay, so after we tap into this area, we don't have to just go in there. You can though. Okay, you definitely could. The R&R was there. Remember, my entries are overlapping confirmations. So that overlap right there, you definitely could have, stop loss below the low and, aim for that previous daily high. That definitely possibility. That wasn't something that I was personally looking at. That's a little bit too aggressive being that high. So I was looking, once we had taken out this high here with this candle, okay, we had what I like to call my shift in structure. Okay, we had that shift in structure. Then we have this imbalance. Okay, and you guys can see it a little bit better here. Where was it? Okay, on Monday we were looking at, actually this wasn't the shift in structure that I saw. So once we came in here, the shift in structure took place here on the 1 minute. Okay, we tapped into that area and you guys can see this accumulation. And now this, a lot of people would look at this and be like, oh look, that's where it shifted the structure. And yeah, you're not incorrect, but that's not the one that I would take. So whenever I have an area and I'm looking at the 1 minute, the last thing I'll ever do is take the first fucking accumulation that gets into my area. The last thing. If I miss trades, cool. I'm okay with missing a trade. But to increase my probabilities, I wait for the second accumulation or a nice shift in structure that's more confirmed, more aggressive, because again, I do not I do not like the first tap and taking a 1 minute imbalance, a 1 minute accumulation right off the bat. Like there needs to be a clear shift to the upside. And so we're gonna identify two things here. One, the failure to go move lower, so you have a mitigation block right there. Okay, and then we're gonna acknowledge the imbalance here. Okay, so you have the shift, the imbalance, and we're gonna just focus on the area that's overlapping both of those areas. Okay, so the overlap here, the overlapping confirmation from this mitigation candle to this imbalance. Okay, that right there is the entry. Not always Switch to September contract. Yeah, I will. Yeah, definitely. So, given that this accumulation here, all right, given this accumulation here, we did pump to the upside and created that 5-minute shift in structure. Now, by this time, I was fully out of the trade because on Mondays, I don't look to really hold trades for too long. So I did get out right here. Price action did return, okay, back into this 5-minute. Then you guys can kind of see this breaker candle right here. Okay, that swept liquidity, broke structure to the upside, it's shifted this whole market structure. Okay, turned us to the bullishness, gave this shifting structure on the 15-minute. Okay, and then created this breaker. But looking down into that same imbalance or that same overlap, you guys can see that's where we came back to. Okay, and then we just played off that area again. Beautiful, beautiful area. I love overlapping confirmations like that. It's beautiful, beautiful. That's why my main thing when I'm looking for entries, there's got to be an overlap of something there. Okay. So that was the beautiful long that we took on NAS. Of course, I went with NAS instead because NAS again was the most bullish. You guys can imagine I fumbled that for sure. Look at all that. It's beautiful though, right? Yeah, I had to go. I had a really short morning for the markets on Monday. So I got out shortly after that, but look at that. Beautiful price action. Definitely. Okay, so now then we'll go back to now CPI. CPI this morning was beautiful. We just literally whipsaw across the board on all assets. We whipsaw it. So there was two things here. Okay, Nasdaq moving to the highs, and then Dow, where was it? Okay, Dow, yeah, here it is. So Nasdaq and Dow had this divergence right here. We'll anchor it to the lows. Okay, and you guys can see this divergence a lot better. So here on the 5, okay, here right when CPI hit. Okay, so right when CPI hit on Nasdaq, we did take it out. That's interesting. Huh. I think I was looking at Nate's feed this morning, and his did kind of like slightly took it out. So no, never mind. Price action just kind of did its thing. Okay. So CPI this morning, we were looking at some long opportunities. The longs did present themselves. We were looking at these long opportunities from these 15-minute imbalances. Now the 15-minute imbalance was created throughout CPI. It was like shortly after CPI, and it took us about like around 9 to 9:30 to actually get there. See, 9:30 actually got into those 15-minute imbalances, and those 15-minute imbalances were there across the board. So Nasdaq fell right through it. Right through it. Dow's 15-minute imbalance held and pushed higher very aggressively. Nasdaq, on the other hand, pushed down, took out the lows one more time, and then pushed to the upside. But remember what I was mentioning is usually when there's a large range already created, there's not going to be much trading beyond it. Right? All we did was play with the low. So even if we were looking from this low to that high, all we did is play with the low. Right? Like, yeah, we took it out, but we just played with it. And we didn't take out the high even though we were looking at bullish price action. Right? So we just played with the range, within the range. Whenever there's a large range already created and you're in the move, don't look for something that's like beyond it. right? Look for something within your range. From if you're buying, buy into premium. If you're selling, sell into discount. Something very quick. You can play within these like ranges that have already been created, these trades that have already hit, major set areas of liquidity. You can trade these things. You just have to know what to aim for, how to manage it. Okay, so beautiful longs. I honestly didn't participate on the Dow. I participated on S&P, and main reason main reason that I had it. I'll get to your comment here in a question. I'll get to your comment here in a second. Main reason that I went to SPX was the 4 hour. Okay, had mitigated area. Not just that, but we had this insufficiency here on the 1 hour. Okay, you guys can see it a lot better. We had this imbalance here below Asian lows, but we had this other insufficiency here. Okay, so CPI comes for the Asian lows, comes into the imbalance. Okay, creates a pretty strong range, and then we're looking at that 15-minute imbalance here again. Okay, 15-minute imbalance, but here within this 1 hour imbalance, you guys can see this gap that we barely tapped. Okay, if we're looking at overlapping confirmations, look at that gap. Okay, so we have that overlapping confirmation there, pushes higher. So let's go into that area that pushed higher. We take from this low to that new high, 50% and below. Excuse me. 50% and below here. You will identify your internal liquidity. Then we'll dive into the smaller time frames. And you guys can see it a lot better here. So there's two, I don't think it'll let me show my entries, unfortunately, but there's two entry points here that I took. And the first one was based off multiple things. Okay, the high right here of this down candle, of this up candle, the breaker, the high right there, and the imbalance in there. Okay, so I took an initial entry here, like right there in that little area right there. Stop loss below the low of the imbalance. Okay, aiming for the high. And I also entered in this overlapping confirmation here, which was this bearish bullish imbalance and this bearish imbalance here in the back. And I just focused on the overlapping areas there that we had to narrow down my area, my entry point. And so that was my entry on SPX this morning, actually. And so you guys can kind of see a lot better here. Yeah, I don't think I haven't really taken any photos of anything, but here's this one when I initially took the entries. Oh, I took it at the low, so that's why I was like, that risk to reward's nasty. Nah, I took it at this low. Right there. Yeah, that's more like it. That's how I took it. And I was aiming a lot higher, but unfortunately, I just got out, or fortunately, I just got out all the way up this high, mainly because since it was news and I had hit my percentage for the day, I was pretty solid. And price action just kind of played around. I do still see it going higher. But for the most part, when there's a large range, I don't like to hold beyond the current range that there is, because most likely will just stick around. Okay? And I don't want to be the guy that was up 10 bands and didn't pay himself, right? So don't be the guy that is up a whole band and then secures, fucking $100 instead once price action comes here. Like, have a plan. I paid myself here and here. Have a plan, right? You guys can kind of see this a lot better here on the screenshot that I took, right? Right after the lows, we get in, and you guys can see right there my first exit, and then I took the final two contracts here. I didn't wait for that final one, right? So that right there, trade management is going to save you a lot of money. Now I do notice that there's a big like a lot of people have their own opinion as to how they need to go break even, and I get asked a lot this question, so I'll show you guys how I go break even. Because it's a question that I get asked a lot. Okay, so I'll show you guys how I go break even. Give me 1 second. An issue that I still have, I only trade NASDAQ, and because I saw SPX and Dow made a higher high at 9 a.m., I thought that even though structure didn't confirm that. I see. And I kept taking stupid L's every now and then because of that. Honestly, if you guys trade any indices, here's the thing. I'll say this. I'm gonna get pretty serious here for a second before I wrap it up, because I have to actually go here soon. So we may not get into the break even, managing your stop loss part of things, because I think this is a really good way to end it. So we'll go. You guys can see me a lot better. Good, because this is a really good situation to go off of to end the stream. Guys, look, I don't trade SPX too often. It's not one of my main things. I look at 4 assets: DXY, Dow Jones, NASDAQ, and SPX. I study all of those every single day. Every single day I start with DXY. Not just because DXY is king and it has a great influence on most assets, or most major assets out there that we trade and love, right? It's not just that. It's the fact that I can't, my brokers, I guess I can, but my brokers don't allow me to trade the US dollar. Okay, a lot of people don't look at the US dollar because most of their brokers don't let them trade it. That's an attachment. I'm making you guys all aware of it. In case you didn't know, if your first asset that you look at in the day is not the DXY, and it's the asset that you love to trade and take all your executions on, I promise you, you're attached to the outcome. That's an indication, that an external indicator telling you that you're a little bit attached to the outcome. Now let me elaborate before some of you storm off the recording or storm off the stream. The reason I say that is because you want to have assets that are giving you feedback without you having to take an execution. You want to create a system in trading where not only are you getting feedback when you're taking trades, but also you're getting feedback from assets that you're not trading. So why look at DXY? Because you're completely detached from it. You don't have any monetary attachment, financial attachment to DXY. You don't. You don't physically trade it, or you don't trade it electronically, right? Most of us don't. And so you need more assets like that. At least 1 or 2 assets that you're consistently looking at that you're not going to trade. So yeah, most people tell me, oh, I only trade Dow, or I only trade in NASDAQ. Good. But you guys need to look at SPX. You need to look at the other 2, because it doesn't matter if you only trade 1. It's 3. Shoot, I spit that there. It's 3. Okay? It's 3 assets. And you looking at the other 2, regardless if you traded it or not, it's your detachment to your outcome. The only way that you will become profitable is the moment that you detach yourself from that monetary goal. That's the only way. What's the best way to now invite more of that into your life? Look at assets that you don't trade, that correlate and complement the ones that you're already trading. Go deeper into your analysis. Go deeper into your trading. Get more confluence into your charts. It can't just be these 5 fucking confirmations that we look for all the time. Liquidity, imbalance, order block, Fibonacci, blah, blah, blah. Like, it cannot just be that. It's so much deeper than that. And if you haven't taken it deeper than that, there's a lot of work to do. Okay? It's a long road to begin with. Who cares? Let it be long. Let it take its time. But I will tell you what will help you and speed up your process is creating a system that detaches yourself from the outcome. That right there, I cannot express enough. That probably is like the biggest gem that I can give you guys from my past like 3 years of profitability, or almost 3 years of profitability. I can tell you guys that. Okay. And with that, I'ma wrap it up. So guys, with that, yeah, I'm gonna wrap it up just because it's getting kind of late for me. I do have to run and do a couple of things, but here's where I want to end it. Is, look, I know a lot of individuals don't know where to get these resources and everything. In the link on the link on this description, on the description of this video, you guys will find my link tree. Book a 15-minute consultation with me. Okay, let's find out what you need, what we can work on. Okay, I have programs that I can help you guys with. I have free resources. I have content. I have over 100 videos on this channel, and I can help you redirect your attention to, maybe you're not financially stable to be able to take on mentorship. Cool, that's fine. I can help you utilize the resources that are free to your disposal to the best of your abilities, and utilize this time and increase the quality of your trading. Okay, the quality of time that you're putting into the charts, and improve your system. Because it's not you that's failing, it's your system. You're failing your system. It's not your system that's failing you, but you're failing your system for a lack of commitment. And so that's where I come in with my 6-month program, or my 6-month program where I do private one-on-one sessions with you. But again, that's not the only option. Hit me up. Okay, book a free consultation. Let's find out what we can do. Okay, I'm happy to help anybody. I know what it's like to not have any resources, not have any help, and being blocked off from communities, from mentors, from this guy, from that guy. I know how that shit is. I don't want you guys to have to go through that. That shit's mad annoying, and that's not what inner wealth is about. Inner wealth is about sharing information, sharing resources. None of it is owned. We don't own anything. Okay, you guys can ask me who my mentors are. I will openly tell you. Nothing's hidden. Being super transparent with you guys. All right, so with that, we'll call it a day. Happy Technical Tuesdays. I will see you guys for FOMC. I'm sorry that I didn't have more time to dive into FOMC. I kind of gave you guys a lot to backtest, though. I felt like I gave you guys the tools to take on and bring on for tomorrow. So I have faith that I gave you guys enough tools to backtest tonight to prepare yourself for tomorrow. Okay? Peace, guys. Take care. All right? I appreciate you guys so much.